live on YouTube, and we'll get started. Okay, and we are live. Good morning, everyone, and welcome to the Crypto Hour again. As usual, no week is a boring week in crypto and with economic news, and especially this part of the year since since we turned into 2023, there's been a lot going on and a lot of contrasting news pushing us one way one week and the completely opposite way the next week. So as usual, we start from the economic outlook to begin with, and then we move on to more specific crypto news. So let me start. First of all, can you all hear me okay and see the screen? Yeah, perfect. Okay, fantastic. So this is the kind of talking about economic. This is Forex, the economic calendar from Forex Factory, and I just I've filtered it so it shows just the important news releases. So as you can see, there's been quite a few this week again. But mainly this week, the main releases has been about inflation. So we got the inflation from Switzerland. It came a little bit higher than expected, 0.6 against 0.5% increase, and from a previous level of 0.2%. But what really moved the market, obviously, are the numbers for the US. So on Tuesday, on Valentine's Day, we had the consumer price inflations, and this is what has changed a little bit of the outlook from what we've had in the past few weeks, where there were a lot of different officers from central banks talking about in a more dovish way, so in a kind of like it's without trying to be not aggressive and saying that they're going to raise interest rates very aggressively, but more like, oh, let's see what happens, and possibly we won't need to increase rates just as much as we previously said we would. But this is, the fact that the number that came out were actually surprisingly on the way up, because although nominally the inflation has slowed down from 6.5 to 6.4%, but the markets were expecting a kind of quite a higher effect on inflation, so they were expecting the inflation to be down more to nearer 6%, and still there's, as you can see in the day after, so on Wednesday we had the figures for the UK, which although they came down slightly from 10.5 to 10.1%, and probably a little bit actually lower than expected, we're still in double figures, which, the UK hasn't seen such high inflation numbers for many years, talking about decades here. So it's still something like kind of like a worrying picture. And at the same time, we've had numbers for the US dollar retail sales that were kind of like better than expected. So we see like increases of 3% month on month. And again, this is something that plays from the point of view of the regulators, something that they look at together with the numbers for inflation. And because obviously if prices are going up and retail sales are up, it means that they can then tighten a little bit more than expected. And the other thing they look at very carefully is the wages increases, because I think wages inflation increases as well. They show that the economy is overheating in a way. And so in a period where we are in a high inflation environment, these are all indicators that point at they needing to do more to slow down the economy. Okay, and you might have seen it yourself. So we had the consumer price inflation on Tuesday, and yesterday we have the producer price inflation, which again, was going up because these are the numbers. Again, that will reflect in the things that you find in the stores a few months from now, because it's what the producers pay for prime materials, and obviously, if those cost more than the product at the end of the the manufacturing process, will cost more as well. So this points one picture: kind of price is still going up faster than the authorities would like. But at the same time, this is very important as well. Do you see here where it says Philly Fed Manufacturing Index? So these are manufacturers that tell you what their picture is for them. And at the moment, is quite negative, because they see a increasing costs and lowering demand. Okay, so although the authorities will need to go hard and maybe keep rising interest rates to slow down the economy, the manufacturers are already feeling the pain. Okay, so from one part, they're trying to slow down the consumers. On the other side, they've got to be careful not to get the economy into a hard recession, because it's almost like guaranteed, pretty much, without any statistical uncertainty, that we are going to go into a recession. How hard and long this remains is being discussed right now, but in a way, it's a juggling act from the regulators to make sure that the economy doesn't slow down too much, while they're still trying to bring inflation down from to pre-pandemic levels, basically, because at the moment, with all the money printing that there has been during the pandemic, it needs to find all these extra money, needs to find its way into the economy, into assets, into goods. And so this is why we have high inflation at the moment, for the simple reason that now there is a lot more money to pay for pretty much the same amounts of goods that we had before. So that's the reason why we see these high inflation figures, and the only way that they can actually this extra money be absorbed is kind of like reduce, in a way, the amount of goods that are being produced, so that people will actually, what do they do with more money, less goods? They will pay even more for the things that they want. So I'm not sure that economically it's a sound strategy, but this is what they're trying. This is what they're trying to do. Today, let's go on to another economic calendar. So this is investing.com for those of you that are interested. Today we've had the numbers from the UK, again for retail sales, a little bit higher than expected. So consumers are still going out spending. Okay, as you can see, the green numbers are basically there to indicate that the results are better than what the market expected, although we're still looking at a 5% drop year on year from the year before. Okay, and from Germany is like 1% drop from the year before, but the market expected worse numbers to come. Okay, so all these are just basically extra things that tell the Bank of England, actually, we might need to increase interest rates more than we expected to. And we saw in the US as well, like a few months ago, is the maximum rate that was priced into the markets was 4.9%. So that was the rate at which the interest rate rise. And now instead we're looking at 5.1%. So basically another quarter of almost another quarter of a percent rise that the interest rates will need to reach before they start going down again. And this have been, for those of you that look at statistics, I mean, I won't bore you with too many graphs, but for those of you that look at the yield, for example, out of the 10-year Treasury bonds, they can see that as these yields have been coming down for a while now, they started climbing again, because again there is an expectation that the interest rates will keep rising for a little while longer. Okay, so coming up today, there's nothing really of note, let's say, going on. There are just some minor announcements. Maybe the only thing that to note is just one of the monetary committee members will speak at around at around 10 a.m. in the US, about 2 o'clock in the UK. That's already, the markets around that time are already starting to wind down for the weekend. Now, so the big talk has been about then the need to raise interest rates again. So let's have a look at a couple of things. First of all, this is the dollar index. And as you can see, the dollar index has been going down since the end of September. And right when we actually broke an important supply zone at this level here, okay, that had held since May, there is, as you can see, there's been a bounce up actually. Now the reason for that is exactly what we're talking about, is that the markets now, that I thought that interest rates had pretty much reached the top level. Now they're pricing in a new increase in interest rates. So obviously, more higher interest rates means it's now worth holding on to a US dollars more than it was a couple of weeks ago, and so the value of the dollar goes up. Okay, but then at the same time, this has a negative effect on the stock market. That you can see this week, they're actually in negative territory. So this is the S&P 500. So 1, 2, 3, 4, 5. This was Monday. So this is where we opened on Monday. Okay, so we can see now we're going up, and now with the inflation figures that have been releases, the markets actually went back down because they're expecting an increase in cost of capital. Okay, so the dollar costs more. It means that whatever borrowing the funds that they need to, the companies need to function, will cost them more, and so there is less profit left for them, and this is why they are going down. Now, I remember somebody said last week, talking about the kind of like why the FTSE, for example, kept reaching new highs. And you can see while the things in the UK are not going that well, the FTSE actually is hitting new high, and this like yesterday it reached an all-time high, again over 8,000 in FTSE. But the one thing to realize is that the FTSE is not really, although it's an index of the London Stock Exchange, it's got nothing to do with the UK economy. Okay, the FTSE is mainly based on mining. The strongest components of the index are mining and energy companies, which are not in the UK. They're just like, they listed in the FTSE, but that doesn't really reflect how the economy is doing. If we look at it, so at least this is the FTSE 100. I can't remember what's the FTSE all share. Now I've got to find, sorry, I need to find the, give me a second. Oops, sorry. I just need to find the ticker for the FTSE all share. ASX index FTSE ASX. Okay. Now, if we're looking at the all share index for the no, it's not. Sorry, just give me a second, guys. Okay, I'll show you another way. No, sorry, I can't find the right graph. But basically, what I wanted to show you is that the FTSE All Share Index shows a completely different picture. It shows us that it has been a decline of prices, and that's the one that has the whole, all the companies in the FTSE on the London Stock Exchange listed, rather than just the top 100. But I'll find you another time. I'll show you another time. Okay. So what we've seen this week, that lots of the stock markets have been rattled by this increase now, hawkish. What is said hawkish because it means a more aggressive speak from the Fed. So let's say as the dollar is pushed up, the stocks and shares are pushed down. So in particular, this was an article from this morning after the Asian session was heading for the close, so which was looking at weekly losses for the Nikkei and the other Asian markets. Will probably be followed by the same in Europe and the US. Now, changing now, going on to maybe have a look at what's happening with the Bitcoin, and going on to crypto. Okay, so this is kind of like a slightly different picture, and everybody is happy now because we see that the price of crypto has gone up markedly this week, from about the low 21s to touching the 25,000. As you can see, yesterday actually we broke through and we went to 25,200. Now, and again, when I say when in doubt, are we zoom out, kind of like, are we out of the let's say the bear market and into a new bull market? I mean, what I said to you before, but what I'm looking at generally is this area here. So until we actually clear of this area between 28 and 30,000, I see that we're still in the bear market, and we can see as, okay, this is the kind of like almost like the long-term picture, okay, because every candle is a 1 day. But if we go on to kind of like a smaller picture, or maybe on a 4-hour chart, sorry, move the controls over. So sorry. So we can see here maybe a little bit more clearly how things are moving. Okay, so this is just basically a couple of days ago, Wednesday, when all this started. And really is a lot of this is, you can see that the market before had reached 24,000 and then had tried to go towards the 25, but had been rejected. So the bears were still in control. So at this moment, there's still quite a lot of bearish pressure on the market, but then with tighter stops. So as soon as the price broke out the kind of like broke out to this level, you can see now a lot of stops being triggered, and this is kind of responsible for these high growth. And funny, if you look at the size of the candles, okay, where do you think that a lot of the stop losses were here? And you can tell this by the more powerful candles. So if you see that this candle here is where price really broke out, you can see where the stops were. Okay, so at this level here, where people are put something, people that were betting basically on the price going down, I think, well, if price gets any higher than this, then I'm out. And this will see all the stops being triggered, and sometimes the liquidations on some of the accounts that were too highly leveraged. Okay, but at the same time, can we see that this, collecting all these stop losses, and then as soon as we are beyond the last bastion, let's say, where people could have put their stops, the market then loses steam, because this is what is not so much new buy orders that caused all this price action, but it's mostly like protective stops from people that were betting that the price went down. But the other thing to notice is this: how we broke into the 25,000 price got rejected quite heavily again. And this is like two days, by the way. Okay, so from last night, from I would say from 4 o'clock last night, but really from 8 o'clock UK time last night, the price came crashing down again from 25 to about 23.5. Okay, so we're not out of the woods, but obviously is now there's a little bit of enthusiasm coming back onto the market. And if we look on CoinGecko here, we look on the general market cap. So you can see that the market cap, this is the value of the whole of the crypto market, went from 1.06 trillion to 1.15 to 1.11. So we're talking about still about 50-60 billion that have been added to the whole the value of the whole crypto market in these past 7 days. Okay, so it is generally there is a bit more of a swagger that's coming back towards crypto, although we're not, I say, by any means. I couldn't really say that we are out of the woods yet, but definitely is looking better than it was looking a couple of months ago when really heavy fear was dominating the market. Now people are starting to come back to crypto, and we see a lot of new wallet creations, which means is that people that hadn't been involved in crypto before, they are now looking interested again because prices are going up. And this is the reason. This is a funny thing that people don't want to buy when it's cheap. They want to buy when everybody else is buying. Okay, and so this is why sometimes looking at what I've told you before, when we were down at 16,000, I told you, look, prices can go up and probably will. That can also come down. But at the same time, you need to start dollar cost averaging your way in if you want to be in crypto, because we might never reach these levels again. Yeah, we could go down to 10,000, and it's still possible. But at the same time, there is a higher probability then from here the market will then start making its way back to the to previous highs that we reached last year and in 2021. So let me just close things as we go down. Going back onto like crypto news. Now, one thing that I wanted to talk to you about a little bit, and these are kind of like big changes that are happening in the crypto world, which then will transfer over to to how we do things. Okay, and in a way, what I would encourage you to do is just to see crypto not just like a way to make money. And I know that obviously that's the first reason that people kind of like move on to are interested in crypto because of the possibility to make a lot of money in a short period of time. But what really is happening is that it's a highly technological ecosystem where we can see a lot of the things that will change the way we do things in the future. And this is one of the things that it's interesting to see how DAOs, and for those of you that don't know it, that stands for Decentralized Autonomous Organization. Okay, so it's another fancy name for a digital co-op in a way. Sorry, co-op, as you say in the UK. That's excuse my accent. Okay, this is what my wife always picks me up on. She said, "Don't speak with the Italian accent. That's just impossible for me." Okay, so this is the importance of DAOs, as a structure, as an organizational system for finance. And so what's the difference is that instead of the traditional structure that we've been used to is like somebody in charge, whether it's a hedge fund, whether it's a bank, or a trusted figure that it's in charge of the funds that are deposited in a particular entity, and then makes all the decision for everybody else. Now, this structure is changing now with the introduction of DAOs in corporate finance, because especially for small organizations that need to move very quickly, A DAO is a lot more nimble and can come to decisions a lot quicker than a central organization can. So we're seeing the emergence of these structures, and we in our little world in AAW, for example, we have created an investment DAO to invest in a Cardano opportunity, for example. And there are many more of these structures that are being born right now. And there are many places in the world now where DAOs are recognized as a legal entity. So you'll see these things appearing first in the crypto world and then moving on to the, if we can call it the real world, where now the two things are merging. But in a way, this is a direct democracy moving into the world of finance. Okay, so in the same way, though, so there isn't a central entity that make the decision, but the decisions can be made on a communal way, because there is a system now that it's available to make decisions quickly, where everybody that has invested in a project has a vote. Okay, so there's not the director of the hedge fund that makes the call. It's everybody as a decentralized organization that's got a voting structure that's very quickly accessible that can vote on decisions to be made. So, and how we are seeing this now, first of all, the theoretical possibility of creating a DAO in crypto and all the little tools that are attached to it to ensure that there's voting, etc., etc. I mean, this can be expanded. It needs a little bit of a mental leap into the future, but there's nothing to stop this kind of structure being used for direct democracy, to run larger organization, and why not even like a country? Because between me and you, for me, the reason why I am interested in crypto and I got involved is not just for financial reasons, but because I can see that this can be again, a rediscussion of the social contract. So how we do things now and the structures that we use is including kind of like the government and the way that the voting happens in parliaments and so on. These are structures that were, I don't think they're fit for purpose anymore for the modern world. They're structures that were put in place, in certain cases hundreds of years ago, in certain other cases decades, but still in a completely different world from where we are now. So now that, and I can see sometimes, we have a 20-year-old son, and I could see, like never before, these kind of discussions that are becoming an everyday things with the younger generation. So there are like 17, 18, 19-year-old are talking about these things. I mean, I never was talking about these things when I was their age, because the structure wasn't in place, wasn't possible then, but it is now. And it's a revolution that's, started 30 years ago in politics, and little by little is taking us to this point. So these structures that are used in DAOs, and there is, for example, for those of you that go to Jonathan's Cardano session, every Friday at 9:30, which again I encourage you to go to today as well, and Jonathan will post the link in the chat box. It's a structure they use in Cardano as well, with the Catalyst structure to vote on who deserves to receive community funds, what projects are more worthy of receiving community funds, and it's a sort of direct democracy with everybody with ADA has a vote to be able to choose the projects that they want the community to support in a way, and the ones that receive the largest amount of votes then receive the funds. And so in a way, just imagine if that kind of virtual cycle, because at the end of the day, if the community is supporting certain projects, do you think that generally those projects will have the support of the community or not? Obviously, because if you voting for somebody, then you are emotionally involved as well in supporting that project. So it's a kind of a virtual circle which is created. Can you imagine the same thing in your local community, in how your local council is run, or how your region is run, or how your country is run. I mean, I know it's something that's probably another maybe 20 or 30 years down the road, but the thing that what I wanted to focus your attention on is that these are the structures that would allow that kind of different system to function. And those structures are now being put in place right now. So crypto is already using them. Crypto projects are already using these structures. And with the new generation of crypto platforms that can deal then with, instead of, thousands, hundreds of thousands, can deal with billions of transactions on a daily basis, those structures will then have the capacity to deal with entire nation states to be represented on the blockchain. Okay, so this is why I wanted to concentrate on this today rather than on other things. But let's go on to other things now. This is California's regulator that has launched a scam tracker for crypto projects. Again, and so these are now the initiatives where central regulators can actually be useful, because if they can provide a way where people can go and find if a project is genuine or not, or at least if other people have been scammed so they can stay away from it, it's a positive thing. So they launched on, they just literally launched this tracker on the 6th of yesterday. Okay, so it's still very fresh. I think it's a positive, positive bit of news from the point of view that there is now a little bit more oversight to stop what has become, really one of the biggest problems in crypto is the amount of scamming that is going on, and a part of the amount of projects that are being hacked at the same time. So if there is something that can be done towards that, it will be definitely positive. On another subject, still within the same sort of thing, we're talking about 4.6 billion have been spent by investors buying just what it was like pump and dump tokens. So these are basically projects that don't have really any substance, but they were just hyped into existence. And then, after they managed to collect enough of the investor funds, these projects will just disappeared and leave people with nothing, or with pennies in the pounds at the very at the very best. So the one thing I wanted to just, if you're listening to this, please listen to one thing. If you take one thing with you, is that we are now at a moment in time where prices of large projects, okay, so you don't need to look really much further than the top 10, top 20 projects, are very, very cheap in historical terms and in terms of what they can do in the near future. So don't go looking for what we'll say in American terms for the home run all the time. Just look closer to where we are now, and some of these projects will grow immensely in the next few years. So you don't need to look too far for something that can make you rich tomorrow, because there's already a lot there that you can invest. Solid projects that have been around for a long time, they will still be around for a long time, that will do extremely well. Okay, so concentrate on what will be referred to as the blue chip in stock and share terms, and less on the new project that your mate told you down the pub, and there's this crypto project that will make everybody a millionaire, and that is not going to happen. On a different subject here, talking about Voyager, which is one of the crypto lenders that went bankrupt last year, and that was bought first of all by FTX, and then recently is being purchased by Binance. Now, I'm not going to go through the article really talking about what has been moved from one place to the other, but the reason why I want to show you, to Binance as purchased this lender, and and will transfer all the users to the Binance platform. So, and this sale will allow customers to recover 51% of the value of their deposits at the time of the bankruptcy filing. So this is a positive thing because it's showing you what can happen as well. Because if you were involved, and this could be, you know, at Voyager, it could be referring to FTX, it could be referring to Celsius. If you have to wait for the bankruptcy proceedings to get anything back, then you might be waiting, you know, quite a few years, because it's not a quick process. But you know, if these kind of deals can be made, people can get at least, you know, access to 50% of their funds, is definitely a good process. Okay. Now, you might have come across the fact that the SEC is investigating Paxos, and they've been pretty much ordered to stop issuing BUSD, which is the main stablecoin that's used on the Binance platform. Now, the one thing, just to make it very clear, okay, although BUSD it's used on Binance, it's not owned by Binance. Okay, it's what it does is just an agreement that Binance actually lent his name for marketing purposes to this stablecoin, which is instead owned and issued by Paxos. Okay, so what the, you know, from the point of view of Binance, you know, what the CEO has come out and said is that, just guys, this is just like just we're going on as normal. Nothing really has happened because this is not our project. What will happen though in the next few months, as Binance had basically condensed all holding in other stable coins to Binance, to USD, to BUSD. Now we're going to see different stable coins back on the platform, because the BUSD will not be issued anymore, and so will slowly be converted onto Paxos from you know, to other stable coins. And so Binance is now minted, you know, 50 million of true USD, which is a different stable coin. It's also used on other blockchains, you know, like Ethereum, Tron, and so on. And so this will, but just in case some of you got worried when they read that news, say don't really worry, because it doesn't affect Binance business model at all. Okay.
So, Lucas, if we have BUSD, should we just keep it, or should we convert it to USDT or something else?
Well, it depends on where you have it. I mean, if you have it on Binance, probably maybe, I mean, you might be forced to convert it anyway soon. Just keep an eye on the prices, because when this has just been announced, so for a few days, it's probably, as people are converting their BUSD, you might actually lose part of the value, because instead of getting, you know, basically the same value of dollars as BUSD, you might get maybe 99% or 98%. So might leave something behind if you're doing while this hype is going on. The BUSD is pretty safe. It will need to be converted simply because of what the SEC is doing, and it's more of a worry for me. It's not so much the worry for BUSD in particular, but worried because of the attitude towards stable coins from the regulator in the US. And one of the things that we're talking about in the you know, in the industry is that, you know, really there is no reason why we need to have US dollar stable coins. It's simply because everybody relates to prices in crypto to the US dollar. But if this thing goes on with the attitude of the regulator to stable coins, the next thing that will going to happen, they're going to be like different stable coins denominated either in other currencies, like for example the euro, the pound, the yen, etc., or, you know, this might accelerate the move to algorithmic stable coins. You know, like you know, for example, like the DAI, make a DAO stablecoins, or like the recently launched, for example, Cardano stablecoin, DJED, for the simple reason of exactly or not wanting to be manipulated and controlled by the issuer of the fiat stablecoin. So this is, if they insist, we might see the birth of stablecoins denominated. I mean, they already exist, but they're not widely used. But we might see, funds moving from the US dollar to different fiat markets. Okay. Different news. This is the SEC now is formally charged Terraform Labs, which is talking about the Terra collapse that we've had last year, and now they're actually being charged with crypto fraud. Okay, so I'm not going to spend that. We already talked about that extensively. So, but it's now these things are big enough news that the regulators are kind of like forced to take action, really, and this has become more of a normal thing to see these actions against crypto scams or crypto frauds. So you'll see this more and more now going forward. Now, so this is where we are talking about the chairman of Binance. They were talking about the prediction for following the enforcement action. You see here. Is that most people use the US dollar pricing for crypto because US dollar stablecoins are the most popular, but this can change. Okay, so they say this. I think that the industry down here will move away to a non-US dollar based stablecoin, and maybe also back to algorithmic stablecoins. So this is probably the fallback from the SEC decision. Okay, going on to a couple of new things, and then we'll take some questions. Now, we were talking last week about A-Star. You remember that? It's one of the Polkadot side chains. Okay, and now Sony actually has teamed up with A-Star for kind of like a Web3 incubation program. Okay, so again, so this is what I'm saying. This involvement of big players like Sony is happening. It's a slow process. Don't think about this something that they decided yesterday. This has been months, if not years, in the making, but it's kind of a big corporation move quite slowly. Okay, and obviously now are looking at understanding, by supporting some of these projects, understanding how they work and see how they can get involved in. So generally, these big corporations don't go all in creating something. They will just wait for a kind of like a winner to emerge, and then they buy the winner. That's how they work. They don't want to do the groundwork. They just want to make money from things. So this is from A-Star, which again, it's as I say, is one of the is in the Polkadot. So it's his own. He's got his own chain, which is it's like a Polkadot works with a series of parallel chains that work together, and then the central system runs some of the processes centrally, and that. But the side chains are pretty independent of one another, and so this is still to be seen in the Polkadot ecosystem. Another important news as well. Again, that was Theta Network, which again we have talked about quite extensively about Theta nodes. It's a video delivery crypto network. And now they just announced that they partnered with an artificial intelligence platform that is to make sure that, again, the artificial intelligence understand what you like and what you're interested in, so they can basically give you the video content that you might be more interested in. At least where YouTube and Google do it in a way where they own all your information. This is at least is just done in a decentralized way, with nobody that will own your information, but just still making sure that you get to see the information that's interesting to you. Okay, so it's done by all the decentralized way, by all the nodes that support your community. By the way, if you wanted to, you could hold one of these nodes on your computer, which is very simple to do, and get some data in as a reward for pushing some of your computer's power to work for the network. Okay, I think this is pretty much, I think I covered the thing that I meant to cover today. So let me just stop sharing, and let's see, and let's take some questions. There's quite a few of you today. So anybody has any questions for me? Don't be shy. You can just, by the way, unmute yourself and ask the question, or you can put it in the chat box.
Look, I heard that Cardano this week has some major changes. Is that something important? Sorry,
some changes. How can? Where is Jonathan? Do you want to answer that question? We are our resident Cardano specialist.
Yeah, there's some interesting discussions going on, but it's nothing more than that, really. There's a reaction to the shutting down of Kraken's staking program in the US, in that legislation came about. SEC came after Kraken to say that staking was security in the way that they were doing it, and so that was then taken off the table by Kraken. They were fined 30 million, and the reaction in Cardano's community has been, well, can this happen to us? And certainly under the rules that Kraken were taken under, we can't be. So nothing can happen to the liquid staking on Cardano. However, Charles Hoskinson has had in mind ways to prevent delegators being able to choose any stake pool that they want. So this would be to comply with regulation or to comply with certain stake pool operators' moral choices, something like that. So if you have, for example, someone in Ukraine is running a stake pool, and they've decided they don't want to have Russian delegators choosing their pool, then they actually, at the moment, the Ukraine operator couldn't say no. They, the power is in the hands of the delegator. They can put their stake wherever they want it. And so the discussion has been around, well, should this be the case? And certainly in terms of regulation, if you are operating your pool and you've got US delegators, then you probably come under US law. And so if the US law comes after you as an operation, they would have some legal grounds too. And so the idea is that you can introduce contingent staking into Cardano. So the operator could actually do some KYC on the delegators and refuse them access to your pool. And so that's the discussion around the Cardano community. The stake pool operators has kicked off saying, no way, never, man, this is permissionless. And Charles Hoskinson said, but it's a good idea. And so there's a to and fro, there's a bit of a battle. But in reality, there's no current threat to staking on Cardano, and only on people who take custody of your stake to actually make money from it. That's more of a definition of a security than liquid staking, where you are retaining custody of your stake. You can spend your ADA at any time. You're just giving the weight of your ADA to the delegator, showing your trust in them to be able to mint blocks and keep the chain up and running. So yeah, I'm not concerned. I don't think I don't think you should be there. But yeah, good question.
Yeah, but I think it's good what Charles Hoskinson were talking about. I think is good because it's good to be one step ahead. So at least if the potential is there, you know, so we could, although at the moment obviously the community doesn't want to have it, but at least, you know, it's something that could be switched on in the future if that becomes then necessary. And it becomes necessary not because everybody we may want it, but because we're forced to. And so there's a way of, okay, if you don't let us do one thing, then we have this in place that we still comply with your regulations and still make sure that you know the blockchain isn't affected. So that's the thing. This is a new environment. So it's important to be, in a way, one step ahead, because we still don't know what the rules are. So they are making them up as they go along, and unfortunately a lot of the rules come, you know, on the back of something going wrong. Okay, this is when the authorities get involved, is when, you know, when there's something like the Terra collapse, you know, or FTX or something like this. That's where they get involved. And so the things they put in place normally are quite heavy-handed, because, you know, that's what, you know, because it's in the news, and it's something that they need to be seen as doing something. So you know, especially the Americans need to be seen as they got a strong hand. They're in control of this matter, and they're doing everything for the citizens. Okay, yeah, right. We believe you. You know, thousands wouldn't, but you know, that's the way it works. Okay. Okay. Any other questions?
Luca, from a macroeconomic perspective, it seems like the US economy's got a fairly tough time because the inflation is sort of cost driven, and so interest rates aren't going to have as much impact on it. The interest rates are still going up further, which is going to be tougher for the US economy. And yet the S&P is starting to go up, which is driving up, you know, the crypto market. Do you see it going down again in the near future? Because I don't know what's driving it going up just now.
Yeah, the thing is that the S&P doesn't really look at what's going on now, but it's kind of like it's pricing things up for the future. Okay, so and you need to see what's represented as well in these indexes, like we were talking about before. Like, you know, you look at the FTSE, and it's not really the UK index, but it's more like a world index of certain asset classes. I mean, the one thing that everybody seems to be in agreement is that there is going to be a recession. You know, it doesn't mean that the index need to go down, for the simple reason is that, you know, those are still, you know, the results are still announced in nominal currency. Okay, so from one point of view, yes, there is going to be deteriorating conditions, so companies are going to make less money, but there is more money around. Okay, so in a way, the extra money printing has to find its way into assets, because, you know, if you got this wad of cash in your hands, you know, at some stage you're going to want to put it somewhere, whether spend it or buy things with it. Obviously, there is more competition for things because there is more money around. Okay, so there is this balance of things between what's happening in the economy, and at the same time with this kind of a deluge of extra cash that there is all over the world, because it's not just a US problem. You know, every country in the world printed a lot of money during the pandemic. So we're still in that phase that this money is finding its way into the price of everyday things. And I think the one thing where you notice it more clearly is in the price of food. You know, and where you look at the price of food now compared to where we were, you know, a year ago, then you realize really what the effect of all this extra cash is having on the economy, because it's like a cascading effect, you know, because everything is costing more. If you know, the feed for their animals is costing more than the milk and cheese and meat, and everything else goes up in price. And then, you know, 12 months down the line, we're spending maybe 30-40% more for our weekly shops than we did 1 year ago. You know, and obviously, if you put it into economic terms for the stock market, that 30% more, it's like 2 years worth of growth for the S&P 500 on average. Okay, but it's whatever happens to the companies that might not be doing as well, still the price of the assets that those companies hold on the balance sheet will go up in nominal terms, even if not in real terms, because we are at levels, you know, 10% plus inflation. You know, if you think a company that has got like, I don't know, 10 billion next year, to just standing still, we'll need to have 11 billion on there, you know, on the books. So the shares, they are represented, a certain number of shares that represent a company will need to go up by 10%. You see what I'm saying?
Yeah.
So that's the kind of the quandary if you have to decide, you know, why as an investment in the long run, as stocks and shares being, you know, achieving 10% plus per year on average, is because of the depreciation of the fiat currency that they're priced in. You know, as simple as that. If you were to do the same calculation against the price of something that has got limited supply, like gold, for example, you will realize the real change in the value of these assets over time. Okay, but obviously nobody is interested to do anything like that because they couldn't sell it to you, you know, as the politicians do. The politicians sell you, you know, everything is going up, you're getting richer, you get more money in your pocket, your wage is going up. That's what they sell you all the time, okay? What they don't tell you is that the things that you can buy with those wages that are going up is less than you could buy the year before, because they've taken away part of the value that they give you, the same way as a credit card company takes part of the transaction that they wouldn't take if you were paying with cash. It's the same sort of process on a small scale that the countries do on a large scale with inflation. So with inflation, basically, it's a hidden tax.
Okay, thank you.
No problem.
May I ask something to that answer, Luca?
Yeah, sure.
Good morning, everybody. So who I found, who is actually doing these things, is Patrick Cardim. He's Canadian. He has a company, North Charts. I have not bought into membership, but he is doing showing lots and loads of very interesting charts of, let's say, SPX versus gold, companies versus gold and silver. And if you really want to get a feeling of what's going on, I could really advise everybody to follow him on Twitter or to look at his website. And it's not very expensive to do it for a few months. It's really very instructive and showing all these things that you just explained.
Okay, Cornelia, if I could ask you please to not to recommend other products here, please. If you want to recommend something, can you please let me know privately, and then I can check them out and talk about it. I'd rather not having recommendation on during these calls, if you don't mind. And by the way,
I'm very sorry. It was just in my enthusiasm because
that's all right. That's all
I'm
right.
very sorry.
These are kind of things that you, from an academic level, you can find out if you follow the Austrian School of Economics, okay? Which is something that, unfortunately, in academia, the Keynesian School of Economics has just spread everywhere and has dominated. And it's funny enough that we can have a whole school of thinking that was born out of somebody that wasn't an economist, that was a politician. So, and if you look, for those of you that have maybe had an interest or studied economics and something like this, you will soon probably realize that Keynesian economics is a nonsense. But unfortunately, is what this world and these the international system is based on. So you need to understand, if you look at the way that things work on a the Austrian School of Economics is based on the gold standard. So if you understand how things work in a gold standard, and how in the best periods of history, from the Roman Empire to the Renaissance, to the period between 18 and 1900, where things were going really well in general for the world, and there were real standards that were growing all the time. These were facilitated by a system of exchange based on the gold standard. Now, as I say, there's lots of information if you want on the Austrian School of Economics. I would recommend, if you want to read something about it, to go and Google it, because it will make you understand how the world really works. But I think it's a little bit more that can be discussed in an hour. I think it will take a few months to really discuss it properly. Okay. Anybody else? Any questions? No? Okay. If there are no more questions, then we can, it is past 9 o'clock, so we can close the call here. And I remind everybody, if you look in the chat box, you can see Jonathan has posted the link to his call that he does every Friday at 9:30 on Discord. So you can click on that link to join the call. And the call he does is talk about everything Cardano based. And just to remind everybody, we're lucky to have Jonathan in our community. Jonathan is a Cardano, apart from other things, okay, it's not just that, but apart from other things, he's a Cardano stake pool operator. So every Friday there's a session, a Cardano based session, talking about everything Cardano. And as we'll come to realize in the future, everything Cardano will become larger and larger until it does a lot of the things that today we do away from crypto. Okay, so interesting to, if you want to know, I look at things in a general way, looking at all the different ecosystems in crypto. Jonathan is concentrated on Cardano, but it's still the Cardano ecosystem. I think it will become definitely, I think, the strongest ecosystem in crypto. Anyway, I hope that you all have a great weekend. So stay safe, have fun, and I will see you again next week. Okay.